Welcome to the Jill on Money Show. It's Tuesday, April 16th, and we are here trying to help you make sense of headlines, answer your financial questions, and be all around smart folks who help you decipher the things that are just maybe bubbling up into your news feed. So I am Jill Schlesinger, and I'm going to invite Mark Talercio, my compadre, over here. Come on that microphone, Mark.
I'm here.
Did you get a new microphone after we got the complaint from my friend at CBS?
No, but it's always the same person who complains.
Only one. But if anyone thinks Mark needs a new microphone, I have offered to buy him a new one. He says no. So, Mark, over the weekend, as the Iranian strike on Israel was taking place, I had a feeling that maybe my Monday morning might be a little bit different. And so I was asked about what's going on in the oil market. And when I was talking to producers on Sunday, I said, don't be surprised if it's not that big a reaction, which is exactly what ended up happening. It was not that big a reaction in the oil markets. And the reason is that so much of the way the markets move is in anticipation of things that are happening. So it is not as if the entire oil complex hasn't been on heightened alert since October 7th. There's this fear that there will be an escalation of fighting in the Middle East, which would disrupt the flow of oil and really start to impact economies in a negative way. But that is not where we are this minute. And so when I went on the air yesterday, we talked a little bit about the price action in the oil market and what to expect and how it could change the inflation story. So I think, Mark, I'd like to air that segment, but then I want to come back and talk about other things that were happening yesterday that may be actually more informative to where I think the economy could be heading. So let's air this segment. This is from CBS Mornings, Vladimir Duthiers, Gayle King, and Tony DeCopel. And I am also there talking about oil prices.
There was little damage on the ground from Iran's unprecedented launch of more than 300 missiles and drones toward Israel on Saturday. It's considered retaliation for an attack on an Iranian embassy in Syria earlier this month that killed 13 people. All of this could disrupt the global economy, impacting oil prices and much more. CBS News business analyst Jill Schlesinger is here to help us break it down. Jill, good morning.
Good morning.
All right, so how might this strike against Israel impact us here at home economically?
Okay, right this second, nothing is really happening on the ground for us. That's important because it's a right this second moment. We are very uptight about it. But remember, when we look at oil prices, it moves the overall inflation rate. And according to the Federal Reserve, when you have oil prices rise, it can add additional pressure on prices. So let's say a 10% increase in crude oil prices can increase the consumer price index, our measure of inflation, by 0.4 of a percentage point. Doesn't sound big, but guys, we're 3.5%. So if we went from 3.5 to 3.9, you would feel it.
Yeah. Why do you suppose, Jill, we haven't felt anything? And if we do feel it, how long do you think that'll take?
Well, I think the reason we haven't is we've had a slow march up of oil prices. If you look at the period of time just from the beginning of this year, crude oil prices are up by already 20%. That has a lot to do with what's been going on in the Middle East since October 7th. Remember, what do investors do? They fear the unknown. We don't know what's going to happen next. So if we think like right now, okay, prices are already up 20%. If things escalate from here, it could be painful for the economy and for consumers. You know where you'd feel that first. You'd feel it at the pumps.
And the prices are never uniform. You travel outside of this tri-state area, go to the West Coast. Big difference in the gas prices that they pay over there.
Well, if you look at gas prices, even just this year, I just said, crude oil's up by 20%. Guess what? Gas prices are up by about 50 cents a gallon since the beginning of the year. Yeah. That's where we are feeling it. I think the real issue now is what does happen next? Yeah. Because if there's further escalation, if oil starts going from about $85 a barrel, now we're talking about 95 or 100, then you get spillover effects. Remember, the companies that have to use energy to get goods to you, to move people, to move goods, those are the places you'll start to see it after the pumps.
Yeah. Okay, so Mark, the oil market drops by like a percentage point, and a lot of this, as I said on this segment, is about expectations and what has happened. But then as the market is set to open, two bits of news come across my screen that I thought to myself, this is actually going to impact the economy a lot more. Retail sales were up. And Mark, as much as we all complain, people continue to spend money. And so my question to you is, when will people stop spending money if they think things are costing so much?
That's a good question. I can say that I am gladly participating in that spend. I mean, we've been spending so much money on various things for this house. It's unbelievable. So, yeah, I believe it. People are spending.
I think people are spending because they have jobs. I mean, the job market is still really robust. And this is the second headline that I thought was really interesting. And that is that Tesla said they're going to lay off 10% of their global workforce. So what happens, I think, is that people read a lot of their headlines. They do a little doom scrolling. They get nervous about everything that's happening. And all of a sudden, these headlines tell me, you know what? The economy is actually not in bad shape. Because Tesla's laying people off does not mean that Tesla is, really a terrible investment. It means that Tesla overhired at a time where they thought their sales would be much higher. And a lot of technology companies have been doing rolling layoffs, but they're still net much bigger than they were 5 years ago. Okay. And in terms of staffing, and retail sales are strong because net, if someone has a job, even if they've spent down a lot of that pandemic era savings, they have cash flow. And that is why they are actually spending. So when you look at markets and you say to yourself, oh, it can't keep going up, because right now, like the S&P 500's up 7 or 8% this year. It's come off the highs. But what would slow down the stock market would be if all of a sudden consumers stop spending. And then everybody who's been like, oh, I just want inflation to come down. This is so terrible. You'll see it come down and you won't be happy about it. So I would really want to caution people who are rooting for overall prices to come down. And I know it's really hard, but remember, at the same time, you're paying more for your auto and your homeowner's insurance. You may be making more money than you ever did 5 years ago. You may have seen your retirement assets rise and your other investments rise. And oh, by the way, your house has gone up in value. Overall, Mark, I don't know. I'm not saying the economy is like the best ever, but it seems in pretty good shape to me, especially considering what we just went through over the last 5 years.
Yeah, well, people forget that. And I think, as I mentioned to you earlier, is that the one area that people, really want to see an improvement in, obviously, is mortgage rates in the housing industry. It's definitely impacting people.
I think it's impacting the mood of people. But I don't think it's like, I think it's just a strange time. I still believe that because people are sitting on these low mortgage rates. And as a result, they're not going to sell their houses unless they have to. They're really not going to. And we've talked to people, and there's an amazing number of folks that we've talked to in the last couple of weeks where they're like, I'm going to pay cash, or I'm going to take a teeny mortgage, relatively speaking, or I'm sitting on this house forever, even though it's not my forever house. I'm not giving up that note. Overall, here's where I think that the economy is still in solid shape. I know that people are really uptight about prices and mortgage rates, but I do think that this is a slow moving trend. It will correct and we will get to the other side. But if I told you guys that, hey, you know what? If I told you in 4 years ago that this is where we'd be, you'd say, oh, I would take that deal. Like, we have inoculations. People aren't dying of COVID as much anymore. It's a much smaller number. The markets are rising. The housing market is on fire, even though there's not enough houses for sale. The stock market's doing well. Like, you would take that deal all day long. No one has that kind of ability to kind of look back like that. So this is a little bit of a resetting of your mindset, I hope. All right, Mark, do you think I've convinced them or not?
I think so. Let me just give you a quick rundown. Speaking of spending, I'm sitting up here in our little loft, so I'm looking outside at our roof deck. Let me tell you what I've bought over the past, 6 weeks. I have 1, 2, 3, 4, 8, 9, 10, 11. I have 12 massive planters. I have 16, 17, and about 24 huge bags of potted soil. And guess what? All of this had to be carried up multiple flights of stairs. I thought I was going to die.
Oh, I thought you were going to say you paid somebody to do that, which is what I would have done.
Amanda told me to hire what the heck is it? There's some service out there that you can actually. I don't know.
It's like
some
Task.
service out
It's like
there.
it's like
Task Rabbit. Yeah.
Meanwhile, Amanda, the queen of finding a service for everything. So God bless her. All right, that's it. That's a short show today because we got things to do and we got to like pump out our content. So everyone listening, if you've got a concern, you're worried about the economy, you're worried about your financial life and how this is all playing into your decision making, we want to hear from you. Go to JillOnMoney.com, click the Contact Us button. Please let us know if you'd like to join us on the air live. While you're on the website, sign up for the free weekly newsletter, and always, always check out the subscription service. $35, Jill on Money Live, access to quarterly live webinars, the past webinars, and special video content. So check it out. You can subscribe to this program on the Odyssey app or wherever you find your favorite podcasts. Please leave us a rating and review wherever you listen. Do me a favor. Lift someone up. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you tomorrow.